And, the equity markets, Ben, as we've discussed, the equity markets are being led by the fixed income markets, by the bond markets, and seeing the 10-year go from just a tick or so over 5% down to 4.5% as quickly as it did, flip-flop that, and look what happened to the equity markets.
It's going to stir things up quite a bit, to say the least here, and that's one of the questions we've been raising this week. Is the shorts covering, Scott, or do you see this as new initiative longs coming into the market right now? Because it seems like the data's been supportive, right, of a bit of a bottoming effect right now, and possibly that kind of mindset with the new longs feeling comfortable to come in the market here. But I'm also sort of wondering, ultimately, though, because earnings in many ways, right, haven't created a headwind. They've been supportive of this sort of bullish narrative as well.
They have, but I'm a bit cautious. There's still so many external things out there, geopolitical events being at, the top, that can really, take this market at a very, very quick moment and pull it back a little bit. However, that being said, I want to be optimistic here. We are, in a very, very typically bullish time of year going into the last month or so of the year. And the economic data that we have seen, coupled with rates coming down, certainly provides those tailwinds that we're talking about.
There has been some optimism here. Having taken out that October high, I think kind of sealed the deal in terms of what we were talking about as far as not shorting into a dull market. And things have changed abruptly right after the CPI data, no longer as dull as it was after the Fed, after some of the data that we had seen recently. Talk to us here, Scott, about gold right now. One of the products I'm watching very closely, because if we see rates start to accelerate to the downside, if the dollar starts to crater here and possibly finds its way back down to those July lows, there you go. I'm kind of wondering, do we make another attempt at that 2100 level?
We actually might, especially if the geopolitical landscape stays as dicey as it is. That is a recipe for gold here to get that move back, above 2,000 and towards 2,100. So, the quick weakening of the dollar here, rates coming down, that's all tailwinds for gold. And this is really a pivotal time, I believe, for gold, because you have maybe that confluence of rates coming down, weaker dollar, and the geopolitical events that are making people a little bit fearful. And we'll see if that really is the store of value, and if that is the asset class that people are running to.
Currently trading on the day here as we speak. Gold at 1973. We're talking 1974, up around 0.5% here. We'll continue to watch that 2,000 level and some of the geopolitical tensions, the impact they have on not only gold but crude as well. Scott, solid breakdown here this morning. Thanks for sharing part of your Thursday with us here on the Schwab Network. That's Scott Bauer joining us from Prosper Trading Academy.